Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. Discover recently approved me for a $35,000 personal loan, but this was not my first time applying. I had applied for a Discover personal loan several times over the past 2 years, and every single application was denied. However, after doing a lot of research, I gained a much better understanding of how Discover evaluates borrowers and what they may be looking for in your credit profile and how to position yourself for the best possible chance of approval. I also discovered several red flags that could hurt your chances before you ever press the submit button on your application. So in this video, I'm going to walk you through the exact step-by-step process that took me from repeatedly being denied to finally being approved for a $35,000 personal loan with Discover. I'll share the credit score that I had when I applied, the income that I reported, how long the process took, and I'll also cover the steps that you can take to improve your chances of getting approved for your own personal loan. So without further ado, let's get right into the video. Before we get into the approval strategy, you need to understand this product. Now, Discover currently offers personal loans from $2,500 up to $40,000. Now, these are unsecured loans with fixed repayment terms of 36, 48, 60, 72, or 84 months. And the current annual percentage rate will range from 7.99% to 24.99% depending on your credit worthiness, and that is also at the time of recording this video. There's no origination fee, there is no closing fee, and there is no prepayment penalty. Discover doesn't allow co-borrowers or co-signers on this personal loan, so you're applying as an individual. And Discover is also evaluating whether or not your individual profile will support the amount that you have requested. There are also basic eligibility requirements. Discover currently states that an applicant must be at least 18 years old, have a valid United States Social Security number, have at least $25,000 in annual individual or household income, and that is the bare minimum needed to be considered for this loan. Now, that doesn't mean that you will be approved. It only means that you satisfy the basic eligibility threshold. Now, Discover may consider applicants with credit scores starting around a 660. Now, my research shows that the average approved borrower, though, they have a credit score of at least a 750. So if you believe that your credit score or your overall credit profile might be preventing you from getting approved, then I recommend that you check out Rising. Rising is an all-in-one credit repair platform that gives you access to your credit reports and your scores. It also shows you it may be hurting your credit report, and it'll help you take action with dispute templates, bureau response tracking, and the auto mail feature. You can send your disputes through the website or the mobile app. Now, I would use Rising as your 90-day credit improvement system. It also includes up to 24 months of rental and utility trade lines that can back report payment history. That will help add 2 years of on-time positive payment history to your credit report instantly. And it's very easy for you to get started. Once you sign up, watch the how to use Rising video. It's going to walk you through the entire platform in about 7 minutes or less. Right now, you can access your credit report through Rising's $1 7-day trial. There will be a link in the description. There will also be a clickable link right here on screen. Now, you are fortunately able to check whether or not you pre-qualify for a Discover personal loan. That will only require a soft inquiry, and it will not impact your credit score. However, you will need to temporarily lift the freeze on your TransUnion credit report before Discover can determine whether or not you're pre-qualified. Another important update is that Discover officially became a part of Capital One in May of 2025, and although the two companies have continued operating separately, their policies and systems and underwriting models, they could eventually change as this merger progresses. However, based on the research that I've done and my own personal experience, I could not find any evidence that this merger has actually changed the way that Discover has done their underwriting, at least when it comes to personal loans. The first major lesson that I learned during this process is that having a high credit score is not the same as having a strong borrowing profile. I've maintained an 800 plus credit score for roughly a year and a half, and Discover still denied my application just 6 months ago. I simply had too many outstanding unsecured loans. So even with a strong income and a great credit score, if you have existing unsecured debt and the combined monthly payments are way too high, it can make it difficult for you to qualify for another large personal loan. Over the past several months, I have been restructuring debt, so I've been paying off certain loans and I've been opening up others with lower interest rates. This helped me reduce my total monthly payments, lower my overall cost of the debt, and create a much stronger borrowing profile before applying again for other products. Now, that was my unique situation. Your biggest obstacle may be completely different. For example, even if your credit score is high enough to qualify, you could still have what's considered a thin credit profile. This can happen when you only have a few credit cards with low limits, no previous experience managing an auto loan, a personal loan, a mortgage, or any other type of installment account. Your credit score may look excellent, but your report may contain very little evidence that you can responsibly manage a large unsecured loan. In some cases, a higher income and an exceptional credit score may help offset a thinner file, but that's never guaranteed. A thick credit profile usually contains multiple established accounts, meaning credit limits, several years of account history, consistent on-time payments, and experience managing different types of credit. And if that sounds like your profile, you may still be in a strong position even if your credit score is not the highest. Remember, Discover is not only looking at your score, it may also consider your income, your existing monthly obligations, your length of credit history, your account age, your payment behavior, any recent inquiries, any outstanding loan balances, and your total available credit. All that information you have to provide on your application, and it will determine whether or not you get approved. That's why two people can have the exact same credit score and apply for the same loan and receive completely different results. Now, if you have the credit score and the income to qualify, but you already have too much existing debt, the next thing you need to do is calculate your debt to income ratio, also known as your DTI. Your DTI compares your required monthly debt obligations with your gross monthly income before taxes. For example, if you earn $5,000 per month and your required monthly debt payments total $2,500, your DTI is approximately 50%. That would be considered relatively high because half of your monthly income is already committed to debt payments before adding the payments from a new personal loan. Ideally, I would try to reduce your DTI to around 30% or lower before applying. Now, this doesn't guarantee approval, but it can significantly improve your chances by showing Discover that you have enough monthly income remaining to comfortably manage your payments. Your DTI should also help you determine the loan amount that you request. Now, the larger the loan, the larger the monthly payments will be. So if you're requesting too much, that could push your DTI beyond what the lender is comfortable approving. Now, you actually may qualify for a smaller loan, but Discover will not approve the original loan that you requested. Now, if you're in a situation where your credit profile is thin or you need to boost your score because it's too low, there are a few strategies that you can consider. The first option is adding an authorized user trade line. Now, this may be the most helpful if you already have a good credit score and you simply need to add more age or history to your profile. You also have to have the income to support it. I do want to mention that income is still important. Outside of that specific situation, I wouldn't recommend relying on trade lines. Now, I currently have two separate videos covering Trade Line Supply Company and Coastal Trade Lines. I recommend that you watch those videos before deciding whether or not this strategy makes sense for you. The second option is to lean on your income. Now, if you earn a decent income and your application is pending, consider offering to provide supporting documentation. Strong verifiable income could help you get approved. The third option is to improve your credit utilization. Now, utilization is one of the most important factors affecting your credit score. So if your balances are reporting like above 10% of your available credit, you want to lower that percentage because that is one of the fastest ways to strengthen your credit profile. You can do this in two ways. The first is to pay down your credit card balances until they report between 1 and 3% of your total available credit. The second is to request a credit limit increase, which would lead us directly into the fourth option. Now, the fourth option is to build comparable credit limits. Comparable credit means your report already shows that you have experience managing credit limits that are close enough to the amount that you're requesting. For example, if you are a borrower that has multiple credit cards with limits around $20,000 or $25,000, that is much better than someone who only has like 2 starter credit cards with $1,000 limits. And again, one way to build comparable limits is by requesting increases from the bank that you already have a relationship with. However, you should confirm whether or not the request will result in a hard inquiry before moving forward. Finally, you may want to consider applying with a completely different lender. Now, I have another video video covering the Lightstream loan, which does offer a similar loan amount, and it is a better option for someone that has a thin credit profile. So for me personally, before I was able to get a large limit personal loan, they were the first bank that actually gave me around $30,000 for a loan, and my credit profile was still very thin. Now, I'm going to link that video right here. I also have compilation videos of how I got $100,000 by using Lightstream. They also pull from TransUnion as well. Now, let's go over my data points. Now, when I applied, I had my income listed as $182,000 per year. If you are in the comments, I just want to stop you already. Again, the income is relevant based off of what you already have on your credit profile. So basically, if you have no personal loans at this time, but you still make 60K and all you have is like your rent and very low debt, you are going to qualify because you have the income that can support the payments. Just because you make more money doesn't necessarily mean that you'll get approved if you have a lot of existing debt. That was kind of the point that I wanted to make. Now, my credit score was an 825 with TransUnion at the time that I applied for this loan. Once again, it doesn't really matter if you have an 800 credit score or a 750, it doesn't make a difference. If you have high income and you have a high credit score, that gets you in the door. But what actually gets you approved will probably be based on your DTI. Can you afford to make these payments? Do you have any wiggle room left? Because if you don't, it does not matter how high your income is, and it does not matter how high your credit score is, you will still be denied. That is the reason why I was denied. Now, my credit utilization was around 7%. If you want to help boost your credit score, then I would suggest getting it down to 1 to 3%. That would be the most optimal place to be. In my situation, my credit score wasn't really the problem, so it didn't make a difference for me. You also don't want to have any derogatory marks. Once again, you can sign up for Rising. You can use that to help you clean up your credit report if you do have any derogatory things that are currently on there. And for existing loans, I currently have 3 other personal loans, one with Navy Federal Credit Union and 2 with Lightstream. I do want to also point out that I had recently paid a loan down, which did free up my DTI. I do believe that was the reason why I was able to get approved. And I have no new credit activity in the last 6 months. I didn't have any inquiries that were at least 6 months old. So I would suggest that. It's okay for you to have let's say you could have 5 hard inquiries. If the inquiries are from a year ago, that is completely fine. You don't want any recent inquiries in the last, again, 6 months. Now, Discover will typically cap your total exposure around your annual salary. So for me, $182,000 of income minus my current outstanding debt is how I came to $35,000. That is what made me request that and not $40,000. And again, I paid off one Lightstream loan with a higher interest rate to free up the DTI that I needed to qualify for this one. And then I knew I could go ahead and reapply for the Lightstream loan once more. Because again, they don't want your monthly debt payments exceeding about 30% of your gross income. And I do believe this is what made the difference. Even borrowers with an 800 or higher FICO score often get smaller approvals because their income or debt ratios do not support more lending. The only other thing that I could suggest, if your DTI is actually good, credit score is good, income is good, you probably have a recently opened account. That is the other thing. How old is your most recent account? If it is fairly new, that can be the reason why you were denied. Now, I'm pretty sure that I've covered every scenario for anybody who's watching this video. So if your credit is bad, you already know exactly why you're denied. All right. If you have good credit, then it could be based off of your income, right? If your income is too low, it doesn't make sense. Your credit profile may be thin and you don't have comparable credit to actually support you asking for the amount that you requested. Now, if you have income and everything, but you have high obligation debt like me, then it doesn't make sense. You have exceeded your DTI. Now, if you're someone who has high credit score, high income, DTI hasn't been exceeded, but you still get denied, you probably have a recent account that you added on there within the last 90 days to 6 months. Now, this would be the formula for getting approved for a personal loan with Discover, and this should cover every scenario that could apply to anyone watching this video. Now, let's talk about the application process and the funding time. Now, my application was approved in approximately 5 minutes. The entire $35,000 was deposited into my bank account roughly 12 hours later. Now, I want to be clear that my experience this time was extremely fast and not every application will move that quickly. Discover states that most applicants receive a decision on the same day, and the approved funds can be sent as soon as the next business day after you accept the loan. However, your bank may need additional time to process the deposit before the money actually appears in your account. Your application could also take longer if Discover needs to verify any of the information that you have provided. So in some cases, they may request your recent paycheck stubs or bank statements to verify your income. Once your loan is funded, interest begins accruing on the amount that was dispersed. Your exact first payment date will be listed in your loan agreement. Do not think that your next payment date will be 30 days after funding. You need to go online and actually check this. Discover allows you to select a monthly due date between the 2nd and 27th of the month, and account statements are generally issued 20 days before the payment is due. Once your account is active, I recommend immediately setting up automatic payments through the Discover app or your online account center. You can view your statements, you can monitor the remaining balance, and you can schedule additional payments and change your payment date if necessary. So although the application itself can be completed relatively quickly, you want to make sure that you review the APR, you want to review the monthly payment, the repayment terms, your first due date, and the total interest before accepting this offer. Getting approved is exciting, but the most important part is making sure that this loan actually fits comfortably within your budget. I want to thank you guys so much for watching this video. If you have applied with Discover and you recently got approved for their personal loan, please drop your data points in the comments. Share the amount that you requested, the amount that was offered to you, your credit score range, or whether you already had a relationship with Discover, as well as your utilization and even your terms and APR. If this video gave you information that saved you from a denial or an expensive loan, please hit the like button and subscribe to the channel. I really appreciate that. Also, share this video with anyone who might need this information. Remember that access to credit is not the same as wealth. Credit is a tool. Now, if you use it with discipline, it can help you consolidate expensive debt, complete an important project, or create financial flexibility. If you use it without a plan, it can create years of payments and thousands of dollars in unnecessary interest. So always use all this information wisely. I appreciate you for watching. I'll see you in the next video. And as always, thank you guys so much, and you have a wonderful day.